Okay, here comes video on Wednesday, the 19th of January 2022. It's just gone 4:02 p.m. Chicago time. Do hope you are doing well. So I had a totally different video planned for today. I was going to talk about professional activity and how to know whether professionals are buying or selling based on a tweet question that I got yesterday. But the close today on the indices and the E-mini was incredibly weak, and we are at breakpoint. At some important support levels that if we break them kind of overnight tomorrow could be pretty dramatic. So change of topic, and we're going to talk about what I call the killing fields pattern, and I'll show you that on a couple of daily charts, and then we'll go down a time frame or two, the 135-minute chart, the 45-minute chart, and so on. But these are pretty high-level charts. So let's talk about the killing fields pattern, and it's basically shown in this chart of the E-mini. So we've got continuous contract. This is kind of my old-ish chart setup. I particularly like my one chart setup. At the moment I'm using that a lot in different time frames, but this is kind of the older kind of time frame kind of setup that we had, two charts side by side, volume indicators on the left hand side, better pro-am, better momentum, price indicators on the right hand side, better sine wave, the support and resistance levels plotted. It's this I particularly like to show you what is going to happen on the support and resistance levels, and why today's activity, potentially overnight activity, is really important. So a killing fields pattern is where the professionals jack it up in order to exit their positions, and it's a false move. Particularly happens at the end of an uptrend move, and with this activity here we had exhaustion buy into those highs kind of pre-Christmas into December, and the professionals are thinking, yep, it's time to get out, but what I need to do is I need to push the market one last push up where the amateurs will kind of get in, and I can use all of that additional buying, kind of blow off buying, to exit my positions. So we come off a little bit from that high. The professionals spend quite a lot of juice getting the market going again. Blue professional bars buying that low and pushing it higher. And into those, the 4800 level, we got a Rambo pattern. So we know this move is being led by the amateurs. When we go down some time frames, you can see exactly what's going on. That's all amateurs pushing the breakout. So Rambo pattern stands for potential reversal of an amateur breakout, RAMBO. And they're getting wrong-footed here because it's gone the other way against this Rambo pattern. And for me, the most important level is this level here, the low of that blue professional bar of this sequence here. So this is the killing fields, where they've jacked it up in order to get the amateurs in the market interested, and they're using all of this activity here to exit their positions. And we know they'll have exited their positions when we break the low of that blue professional bar and the better pro-am trailing stop kind of flips around. So we're super close to that getting broken. Whether we do it overnight or tomorrow, who knows? I mean, maybe there's an outside opportunity that it just catches there, but we need tomorrow's activity to be explosively to the upside. We need to break the high of today above 4600, hold that level, and then kind of push to a new high. But if we break through it, they've been exiting during that, they're not interested in the market, and it's kind of turning away. On the support and resistance levels, we've already run for our pullback to end of trend on the lowest time frame. We've had a couple of support to resistance play out after that, so that's the second cyclical turn after an end of trend. So on the lowest time frame here on this daily chart, we're played out. What we have to do is now go make a support on the intermediate time frame. And the intermediate time frame, the last time that we saw a signal from them was, ages ago, back here with a break above resistance into this continuation of this uptrend, which is why all the bars are in red. And this will need to kind of crash down and get supported by the cyclical turn on the intermediate time frame, where the intermediate lines cross. At the moment, you can see these slightly thicker lines here, here and here. These have to kind of come together and cross. So I think we're going to do a loop of that, and they'll come together and cross, and that'll save us, as a support level that comes in on the intermediate time frame. Now that's what the mini chart kind of looks like, but each of the indices are making quite different patterns based on their strength and so on. The Russell has been the real loser out of all of this. It's been the weakest pattern, and I talked about this. I mean, actually this pattern has been playing out on the Russell for a year. Would you believe that? Because this is where we had the killing fields play out. That was the pattern on the Russell, and they've been using this entire year's activity on the Russell to get out of their positions. And this last little bit of activity here into the close, they've been pushing it up a little bit, and now we're breaking down through the lows of that blue professional bar. That was the last kind of, this was a bit of a killing fields here. They jack it up, use all of that activity to get out. They jack it up again, get out, and then we're kind of moving down. So there's been three sequences, if you like, of killing fields on the Russell. 1, 2, and then 3 here, and lastly we've kind of crashed down through. So the Russell is the weakest of the lot. On the Russell, we've already made our pullback to end of trend. We had our pullback to end of trend on the intermediate time, on the lowest time frame, back at the beginning of last year. Then we put in pullback to end of trend on the intermediate time frame. We're now going to crash down into probably a pullback to end of trend on the lowest time frame that will sync up with a cyclical support on the highest time frame. So when the thickest lines here kind of come together on the highest time frame, and with this particular pattern here, we've broken down through through supports on the low and the intermediate time frame there. So that's a strong pattern. When they're close together, they both get broken. This needs to run pullback to end of trend at least on the lowest time frame. So we're breaking into a trending move on the Russells there. So the Russell's kind of the weakest of the lot. Dow futures chart, again, similar thing. Here's the killing fields pattern, jack it up. It's being led by the amateurs. They're getting wrong-footed. And then the last couple of days, the professionals have been, what was that? Maybe got 3 bars? Yeah, 3 blue bars. Just sell, sell, sell. On this chart on the Dow, again, we've made our pullback to end of trend on the lowest time frame. We had a couple of those. Then we went to pullback to end of trend on the intermediate time frame. So now we're done in terms of trending, and we need to cycle through and come back down and make pullback to end of trend on the highest time frame. So we're weak at the moment. This last one got caught, but this one is looking as if we're going to break, and we're going to continue until these thick lines kind of come together and we have an end of trend on the lowest time frame syncing up with that. And then lastly, the NASDAQ, and we've had exhaustion buy, bearish divergence. Again, not as clean a picture in terms of a killing fields kind of pattern, but we're breaking below the lows of that at the moment. The trailing stop hasn't been broken like that. So, but we've had 4 days of kind of professional kind of pretty much selling it. As soon as we break this trailing stop, that's when we know. And again, the pattern here, we've had pullback to end of trends on the low, intermediate, we've had another one on the low. We're maxed out in terms of exhaustion buying, bearish divergence. We're breaking into a downtrend here. And again, on the NASDAQ, we've got 2 supports now that we've broken, the low and the intermediate. So now we're in a trending move on the NASDAQ. We've got white bars here. This is going to run. So interesting day today. We can also kind of back it down and start to see some of this detail. This is the 135-minute charts. There's exactly 3 135-minute bars in a day session of the E-mini. There's where they held it at the beginning of December. Killing fields jacked it up. We can see all that detail there of the amateurs right at those highs with a triple Rambo pattern. They've been using all of this time to get the amateurs interested so that they can, offlay their positions there. We're in a big kind of move here, where we're starting to break on the 135-minute chart into a downtrend. We've had all of our pullback to end of trends and so on the low. Intermediate wasn't a proper pullback to end of trend. It went for this kind of a pattern, but we're overdone cyclically on the upside on the 135-minute chart, and we're breaking 2 support levels on the 135-minute chart. The 45-minute chart, if I go to this one, you can see it in even more detail. So last move down here, all those blue professional bars come in at the 45, jack it up, and then we had, coming into Christmas time, it was all of these Rambo patterns. The amateurs are active during the. We had a whole family here just driving that activity up. It's because the amateurs tend to trade these holiday periods, and not good. So here we've kind of broken through our trailing stop. We're in downtrends and so on. So the 45-minute chart just showing that bigger pattern, the way they kind of moved it up. So it's killing fields right here above below 4,500 is the absolute kind of key level down on this chart, the 45-minute chart, you see we're below supports on all three time frames, low, intermediate, and the highest time frame, which means that this has got to go for potentially a pullback to end of trending move on the highest time frame on the 45-minute chart. So we've got some distance to go on the downside. We can also look at some other markets that tend to be a little bit prescient in terms of their forward-looking. Before I do that, though, let me just see if this is helpful on the 45-minute chart. Let's show you that on this kind of simplified view. That's where the last signals that we had, blue professional bars at the lows, and the trend keeps on going up. Blue professional bars at the lows, they push it up, but if that got, if this had been broken at this point here, we turned around and gone through here, that would have been a killing fields kind of zone there. But with this particular move at this point here, the professionals have decided, no, we're not going to support it again. Like last time we came down, blue professional bars kind of come in and supports it and pushes it up. This time we didn't get that. We didn't get blue professional bars here or here supporting those lows, and so they're exiting on all of this kind of activity here. They've been exiting, they've been taking advantage, exiting here, and this is a classic under the lip kind of trade here, where we've come back up to test and bang, we're just kind of rolling down. So that's the 45-minute chart. The 135-minute chart. We'll get a signal on, is it this? No, I think it's the daily chart, beg your pardon, where we're about to get a signal here, because three things have come together. We're overbought, we've had our bearish divergence, we're about to crack better pro-am trailing the stop line, and once we do that, we'll get a signal, a triple signal on the daily chart. But there are some other charts that you can look at that are more kind of prescient. EEM, so this is the emerging markets here, and I was talking about this a while ago, that we'd had our triple signal back here at the beginning of the year. So the emerging markets has been an extremely weak sector here, and this has been in a downtrend the whole time. We had a stair-step trade here where it steps it down. We've had a little bit of strength here, but that could easily just kind of collapse and go the other way. So we've had our triple signal on the emerging markets there. EWA, which is the Aussie market, I kind of like looking at this as it'll be part of that emerging market group's EEM, but it's one particular one that's interesting. Again, almost like killing fields, they kind of jack it up at this point here. Have been using all of that activity to get out, and just lately they've been super active kind of here. We're in a downtrend. We've had our triple signal, so that's not looking good. You can also look at HYG, which is high yield bonds, and is very active at the moment. So there's a lot of activity kind of going on, but we're overbought. We're breaking into a downtrend. Breaking through this support here will not be good. And then the other one, IYR, I tweeted about this a while ago when we had these signals kind of go off, and we've just had a false break here, and we've come all the way back down. So it's almost like those blue professional bars, we're jacking it up into that killing field zone, and the lows of those blue professional bars. The trailing stop has actually picked this as a turning point instead of the low of that blue professional bar. But you can see we're turning into a downtrend, breaking below that 105 level and so on. So it's going to be kind of absolutely key. So today's activity was super important. We're about to break supports, and if we don't hold tomorrow overnight and into Thursday's activity, they've got to work damned hard to kind of hold it and push it up. I would suggest this is going to be the story for the next couple of weeks, the weakness that we're going to see and where it runs to, where this kind of runs out of puff. Anyway, so there we go. Good luck with your trading. Looking forward to tomorrow.